All right, let's just get right to it. You are ignoring the single biggest investor in your life. I mean, think about it. Every couple of weeks, thousands of dollars just appear in your bank account. And what's expected in return? A little bit of your time. But you're treating that source of capital like a simple ATM. And that's the whole problem, right? You're treating your employer like an ATM instead of what it really is, a venture capital firm that is actively trying to make you rich. It's a fundamental miscalculation. And honestly, it's costing you an absolute fortune. It's like you're sitting on a machine that prints money, all while complaining that you just can't seem to get ahead. So, here's what we're gonna do. We're gonna reprogram the way you think about your job. We'll start with the investor you've been ignoring, then we'll look at your investment term sheet. After that, we'll uncover something called the shadow portfolio, walk through a 10-year case study, and finally, lay out the new rules of work. Okay, let's start with a big one. A fundamental reframing of your 9-to-5. See, you think of it as an obligation, but that's not what it is. It's a strategic financial partnership. The way to think about it is this. Your employer is a private equity firm, and you're their star portfolio company.
So this is really the core of it. The old way of thinking, job, salary, benefits. The new view is completely different. You don't have a job, you have an investor. You don't get a salary, you get seed funding. And you don't have benefits, you have free capital. They are literally offering you investment terms that would make a Silicon Valley founder just break down in tears. And most people are too busy thinking about what's for lunch to even read the deal.
All right, so let's actually look at this investment term sheet that you've probably been ignoring. We're talking about the free money that's just sitting there, the stuff that most people leave on the table because, they see it as boring HR paperwork instead of what it is, a deal memo.
Let's start with the most obvious, the most brazen example, the 401k match. We're talking about a guaranteed 100% return on your investment, instantly, the second the money hits your account. No hedge fund manager on the planet can promise you that. In fact, if they did, they'd probably be arrested. And yet, so many people just turn it down.
And then you have the health savings account, or HSA. This thing it's arguably the greatest legal tax shelter available to the average person. It's triple tax advantaged. That means money goes in tax-free, it grows tax-free, and you can take it out tax-free for medical expenses. But what do most people do? They treat it like a little debit account for their copays. It's like using a Ferrari to go get the mail. It just completely misses the point.
So let's actually put some numbers to this, right? Let's say you're making an $80,000 salary. How much available capital are we actually talking about here? How much is just being ignored every single year? Okay, let's run the math. A pretty standard 6% 401k match, that's $4,800 of free money. A typical employer contribution to your HSA adds another grand. How about that education benefit that almost nobody uses? That could be another $3,500. A little wellness stipend? Another $500. You add it all up and you're looking at almost $10,000. $9,800 to be exact. Capital that's just ignored.
Now, what happens if you take that $9,800 a year and you let it compound over a 30-year career? At a pretty modest 7% return, you are leaving almost $1 million on the table. This isn't a motivational speech, it's just arithmetic. So you see, the issue isn't that you're broke. It's not that you're lazy. You are simply misallocating capital. You're the CEO of You Incorporated, and you're turning down the best investment deal you're ever going to get. But look, that free money, all that explicit stuff, that's really just the beginning. That's the foundation. Now let's talk about the shadow portfolio. These are the hidden assets your job provides, the ones that generate the real wealth over the long haul. Your job provides you with 4 critical but often invisible assets. First up is credibility. That W-2 form isn't just a tax document, it's a golden ticket that unlocks mortgages and loans. Second, you get stability. That predictable paycheck is the safety net that gives you the confidence to make bigger, smarter investments. Third is something called time arbitrage. Think about it. You're paid for your presence, not every single second of output. All that downtime between meetings, that's paid time you can use to invest in yourself. And finally, all of this builds optionality, which is just another word for free. And really, this is the entire game right here. So many people think freedom is about escaping the 9-to-5. It's completely backwards. True freedom comes from using the 9-to-5 to build up so many assets that the job itself becomes optional, a choice, not a requirement. And this isn't just some abstract theory. Let's look at a case study.
Let me show you what this actually looks like when you put it into practice over 10 years and how it translates into some very real numbers. So year one is all about building your infrastructure. You're maxing out all those benefits, you're building skills, you're saving. By year three, you've gotten a promotion. That means your seed funding has increased. Year five is a big one. You use that employment credibility to buy your first real asset, maybe a rental property. By year seven, you can leverage the equity in that first property to buy a second one. And by year 10, well, between your 401k, your HSA, and those properties, your net worth is pushing past $600,000. See? Your salary was the fuel, but now the assets, they're the engine. And this right here is when the entire psychology flips. This is the moment. Most people get to this income level and feel trapped by their lifestyle. But you feel liberated by your assets. You're not dependent on your job anymore. You are simply leveraging it. It's become just one piece of a much larger wealth-building machine that you control.
Okay, so let's wrap this up with the new rules of work. Because once you adopt this mindset, the entire power dynamic just flips. It completely reverses. You're no longer working for your employer now works for you. And the rules are actually very simple. Number one, extract maximum value. Every single benefit, every match, every stipend. Number two, deploy that capital. Your salary and all that free money go into buying real assets. Number three, build quietly. No need to announce your strategy. And number four, you leave. Not when you feel like it, but when the math tells you that you can.
Because here's the thing. The real scam isn't that your job is trying to hold you back. The real scam is that most people will go their entire lives without ever realizing their job is the single best investor they will ever have. It's offering them free capital, huge tax advantages, institutional credibility, and they just walk away from it all to chase a feeling of freedom that they haven't actually paid for.
So, if this has changed how you see your job, you already know what to do.